Hi, and welcome to the podcast Making Sense, brought to you by Navy Federal Credit Union. I'm your host, Emily Bigham, and each week I'll be taking your questions to the experts to help you make sense of your money. Pun intended.
Well, I gave my usual commentary on GDP this morning, and it was good. I thought I worked on it and sober and all, and then I just kind of unleashed a tweet on Twitter. I unleashed a tweet, and it's kind of taken off. And it's basically, before everybody pats themselves on the back for having a great third quarter, it's because we spent trillions of dollars and the Fed opened the spigots to all this money. And that's how we made it back in the third quarter. So,
right.
Yeah.
And
we're still not walking on our own yet.
Right. It's so interesting, too, to read those reports and to think about it from a regular consumer reading it versus someone who's really plugged in and understands the why behind it. And by the way, for those of you who have tuned in to the Making Sense podcast, we are on with Robert Frick. He is our corporate economist here at Navy Federal. Bob, not sure if you knew we were recording, but I love the real-time Twitter feed. So what was I reading the other day where it was so interesting how everyone who was reading it was completely misconstrued. I think it had to do with spending, and it might have been a monthly report, maybe consumer spend or retail spend.
Right, probably retail spending.
Yeah, and no one ever talked about the stimulus checks and the way that money's just, and also I think it was the credit. It was consumer credit, and they were trying to say that that was an indicator that the economy's bouncing back. And I'm thinking, but it's all credit. Are they? No one's paid any money back.
Well, yeah, we got these trillions of dollars, and a lot of people banked it, and a lot of people paid down their credit lines, which is as good as cash. So they have more credit that they can use, and they have more money in the bank. And we're still coasting on that when it comes to retail spending, at least. And once you factor that in, things don't look nearly as rosy as the numbers would indicate.
Right. And on that note, given the way that the economy has shifted this year a little unexpectedly, what can you tell us about, can you give us an overview, I guess, about what you've seen happen due to the pandemic and what you're thinking is going to happen early next year?
Sure. Well, obviously, the economy tanked in the second quarter when everything shut down. Some of it was the government said shut down. A lot of it, most of it was people said, I don't want to go out with, COVID raging. We bounced back in the third quarter, but as I say, mainly because the government shot trillions of dollars to individuals and small businesses, and the Fed took interest rates down to zero. So third quarter, was mostly a bounce back, but it wouldn't have bounced back if the government hadn't weighed in so heavily. So we are still, to some degree, on life support. And even though spending's pretty good and consumer confidence is low but holding steady, we are still coasting on government programs. And the idea is we probably need more stimulus to get us to that promised land next year, second or third quarter, when we start getting vaccines and treatments, and people can really breathe a sigh of relief. More jobs come back, more spending, and we can really start walking on our own 2 feet instead of having, the government assistance kind of prop us up.
Bob, when would you say it's too late for the next stimulus? Like, when would you say is the deadline?
Well, it looks like it won't happen until January at this point because, the federal government is gone home until after the election, won't be back probably until January. So I don't think January is too late, but if it goes much beyond January, we're already seeing permanent damage done to the economy. Millions of people are going into long-term unemployment, and that's bad. The economy depends on people working. More people working, more paychecks, more spending. That's just how it works. It's the bottom line. And the more people go into permanent unemployment, the longer it is for those people to get back to work. And we've proven that over and over again. In the last 10 years, we really proved it in spades. It took a long, long time for a lot of people to come back after the Great Recession. So I think we're okay. January, maybe February, but if somehow we don't get stimulus, then we're going to have to crawl out of another pit.
Well, Bob, what if we get a vaccine? Right? So,
Pardon me?
what if we get a vaccine? And
well, I'm
need a
counting on a vaccine. I'm saying that, assuming we get a vaccine and it's well distributed in second, third quarter, but we've been building this bridge, this $3 trillion bridge to get us to, essentially, since apparently we can't control COVID on our own, we're going to need to get, vaccines and other medications. But we've built 80% of a bridge. Now, 80% of the bridge only gets you so far, and that means we're going to be falling off the edge for that last 20%, which is really, again, second and third quarter of next year. So I'm not the only one saying this. Most people are saying this. We need more stimulus. I don't think it has to be a lot, but we certainly have to help lower income Americans, especially in small businesses, just to get them to a point where they don't declare personal bankruptcy, they don't fall into long-term unemployment, they don't get so far behind on their bills they can't dig themselves out.
Right. I guess that would be, preventing the long-term damage. And also, I think, just being able to give people some confidence and make them feel a little bit better. We're heading towards the winter. We live on the East Coast. You see how people's moods tend to drop on the sunshine. And I think just knowing that there's something on the horizon is a positive sign. And I haven't really been reading a lot about potential stimulus in January and February, and hearing that, I'm optimistic, and I think that that's something that people should be talking about, is that just because we're not going to get one right now, or in November, doesn't mean that we're not going to get one. And, like you said, we're still on, life support due to government funding. And if we can just get to January and February, things can turn around. And so do you have any short-term tips for people who are, trying to stretch their finances as much as possible?
Sure. I always do. As a former personal finance journalist, spending years doing that, I always have advice to give. But I think the advice right now comes with an interesting preface, and that's that people are doing great right now, and there's nothing that focuses people's attention like crisis. And so you see people saving a lot, not spending as much, paying down their credit lines. People behave very rationally when money is tight. On the other hand, when things are booming, like you said, with the credit bubbles and the housing bubble and the internet bubble, people then spend like crazy. People aren't doing that now, so that's great. But people still react in bad ways during times of crisis because anxiety makes us behave emotionally. So my number one piece of advice is make a list. Make a list of all the things you're paying now that you really don't need, and stop paying them. My wife and I went through and just cut a number of things off of our, things that are deducted out of our checking account. We redid our cable and got a service, which is saving us hundreds and hundreds of dollars a year. We canceled 2 trips. Not that we were going to take those trips anyway. One of them was to England, but we typically rent a house on one of the Finger Lakes every year for our family get-together. That's gone. So when you make a list, a lot of good things happen. One, you look at things that you might not have looked at anyway. 2, you tend to prioritize things, which we don't do if we're just trying to think of things in our head. And 3, and most importantly, once you make a list, you can start checking things off the list. That gives us a sense of accomplishment. That makes us feel better about ourselves. It shows we're making progress. So don't rely on all the things churning in your brain right now to make financial decisions. Write it down.
No, those are some great tips. Especially as we approach the holidays too. I think it's really important for people to think about what's important to them. There is a lot of gift giving and there's a lot of shopping, but there's also a lot of sales. And if you make your list and prioritize, and there are things you absolutely need, you can probably find them at a cheaper price, just given the shopping season. I want to go back to what you said about the housing market, though, because earlier we were talking about in the 2008 financial crisis. That was more of a housing market catastrophe, and I think it's really difficult to try to compare what's happening now with previous recessions because you're seeing people are looking to buy homes now. They're moving out of cities, they're buying homes. Rates are really low. So for certain people who are in good financial situation, it's probably a good time for them to start making those big purchases that they've been saving up for. Can you talk a little bit about how this, potential recession is different from previous recessions?
Yeah, and that's really interesting. When it comes to home building, home buying, that is one of the few bright spots in the recovery right now. People talk about a V-shaped recovery in which we went way down, we've spring back up. Housing is probably the only clear spot in the recovery in which things are going so well. Part of that is you have a lot of millennials that are becoming of home buying age. Part of it is interest rates are at historically low levels. Part of it is because there's been a tremendous backlog of home buying, and now we're finally being able to, get out of our houses. The whole real estate community has made it easier to buy a house. My family just sold 2 properties, and they go to great lengths and do interesting things to allow kind of contactless buying. And it went very smoothly, and the 2 townhouses we sold went very quickly. So housing is a big bright spot if you're selling. If you're buying, it's very tough because there is so much competition. One of the things that I was holding back on is committing to this idea that there's a lot more home buying now because people are moving out of urban areas and moving to homes where they can establish home offices, rooms where their kids can, essentially go to school remotely. Just in the last couple of weeks, there's been enough data to come out that I finally buy into that idea. It's been anecdotal, but now I think we have the numbers to go with it.
So you do buy into it?
I do buy into it, yeah. So COVID, yeah. I heard this great quote, COVID is reconfiguring us. And not just how we spend money, but how we look at our lives and our lifestyles. And this is one of the big ways that we're doing it is we figured this is going to be a long-term situation. Now, I'm not pessimistic about that. I think certainly a year from now, there's going to be a lot more travel, a lot more restaurants, a lot more jobs. I think we're going to bounce back. But I think we're finding that we can work from home efficiently. I think that COVID will be with us to some extent for a long time. And people say, okay, I'm not going to fight it. I'm not going to hold my breath. I'm going to change my life to basically make allowances for a long-term situation.
Right. Yeah. I mean, it's been long enough now that I think people are beginning to understand that this could be longer term and you can't fight it. I mean, you kind of just have to figure out what works for you and your family. And I want to go back to travel for a minute because you said that you expect, when this is over, that travel will bounce back. And due to the fact that so much, airline travel was for business, and now it's, very unclear whether companies are going to be sending people now that we can work from home efficiently. What is your outlook there for travel as far as, in business impact on travel, I guess?
Right. Well, a good friend of mine works for a travel trade publication, and I follow what he says. And business travel is never going to come back, at least not in the foreseeable years to what it was before. And that's disappointing, for me, because I go to one conference a year, and it looks like that was canceled this year and be canceled next year. I really enjoy that conference, but there's been a lot of superfluous business travel, which I think everybody is recognizing. And it's just cheaper not to do it. And so airlines are recognizing that. Now, leisure travel is something else again. And I think as COVID levels come down and come way down, we're going to see leisure travel pick way up. That might not be until 2022, who knows? But people need to travel. People want to see other places. People want to visit their friends and relatives. That's going to come back 100%. I'm positive.
So personally, I'm still traveling for personal reasons. I live on the East Coast, as you know, but I'm from the West Coast and gone back a few times. And I think it really just depends on comfort level because the airlines I think have been doing a good job, but also on travel, you mentioned superfluous traveling for business and how that's probably not going to come back. But I tend to think so. Me personally, having part of my team up here at headquarters in Virginia and then part of the team down in Pensacola, it's really important to me to go down to Pensacola and see the people on my team and connect in that way. And I think there's something about being with people in person and, with you, with the conferences, I'm sure part of that is networking with people who are in your circle. And I mean, we need
Right.
that human connection. I don't want to be constantly through a computer, through the phone.
Yeah.
I think it's really important for business.
Yeah, I agree with you. I don't consider that superfluous. As a matter of fact, just in a meeting we had yesterday, one of our executives said, how do you think things are going? And I said, well, we're very productive right now. And in fact, more productive in some of the things we do. However, I really miss that personal contact. I was in our headquarters building earlier this week to drop off some things. And I really miss wandering around and talking to people, talking to you and, now in credit cards, talking to people in savings, talking to my risk management colleagues. I get a lot of good ideas. And in some of the project I work on, the projects which take innovation, which take new thinking, you need to be face-to-face to do those. I don't think you can do those nearly as well, via Zoom. So I'm agreeing with you.
Yeah.
I think we do need that to an extent, but I think a lot of times people were traveling for really no good reason. And in a previous job, I was traveled to the West Coast a lot into Southern California. And sometimes I just go there overnight or for 2 nights just to meet with a couple people. There was no reason I had to do that and take a red eye. Now, I love Santa Monica and I love meeting with the people I met with, but I could have just as easily done that via Zoom and saved the company I worked for then thousands of dollars in
Well, I
plane
think it's
fare.
all yeah, and it goes back to trusting your employees and making sure that when they do travel, it's for a reason. And
Right.
And Bobby and I used to work together very closely when I was in PR, and then now that I'm in credit cards, we'll kind of talk about what's going on. And of course, I get my personal finance tips from you. Missed that. But it's really difficult to do research for a project when you have to set up a call, with everyone. And I think we're probably learning what roles are good at home and what teams can function well working from home, and then who needs to, be in the office face to face. So, I think that's another positive thing that people can do while we're in this situation is start thinking about your business and how the working from home situation works or doesn't work, and where you can save money or where you're spending more money because of the situation, and kind of re-strategize.
Right.
And so,
and coming up with exactly. And come up with the new strategies. I mean, as you know, I work on various, behavioral finance projects, and it was much easier to do those when I could sit in a room with people and explain to them these new concepts. It's harder to do that if I do it in the paper or even if I do it in a Zoom meeting, because as you know, I get excited about it. I try and motivate people. I can answer a lot of questions. I can read their body language. You can't do that. So now we have to find kind of new ways to push the envelope. I think, for Navy Federal, I'm kind of astounded that every month people are finding new ways of doing that. And we are coming up with new products and finding new ways to help our members and that sort of thing. So it can be done, but I think it takes more effort.
Well, I think part of that too is because, Navy Federal, our strategy really hasn't changed. It's always serving members. And, I know, for example, in credit cards, some of the changes we made to our products a couple of years ago are doing really well right now because we've
Right.
always been thinking about, no matter what happens, like how are we just going to best serve our members' needs? And I want to get a little bit into that. So, the military and veterans, how has this impacted the military? And also, have you seen anything change with employment with veterans?
Well, the good news for veterans employment, which just in the last few months I've really started looking at under a microscope, is that veterans employment is always low. Or veterans unemployment is always at a very low level. When the pandemic hit, veterans did lose jobs, but not nearly at the rate that the general population. And veterans have gained their jobs back more quickly. That's because veterans tend to be better trained, better educated. If you're a veteran, you've shown that you really know how to get a job done. So veterans are great employees. I think everyone knows that. So veterans are doing well.
Too.
Yeah, exactly. Right. They know how to handle a crisis. So what's been interesting, especially for me, is people have been asking me, what's a good strategy for veterans? Should they extend, if they're offered, should they extend their hitch? And given a choice between, coming out of the military into this environment and coming out 6 months or a year from now, I think unless a veteran has a great job or a soon-to-be veteran has a great job lined up, I don't see any problem with staying in the service, gaining more skills, kind of riding out these rocky times. So I know a lot of people have been preparing, a lot of our military members have been preparing for their careers, sometimes for years, have gotten degrees in the military, gotten special training, have lined up jobs. And if they're ready to get out, great. But if they're not ready, and they expect that they're going to come out into this great environment, they're going to be sadly disappointed, and it's better to wait. And so that's what I've been advising, some people, who are still in.
So the military community is definitely faring better than the civilian population.
Oh, yeah, and military
makes sense.
Yeah, military spending, if you're still within the military spending is still strong. When you leave the military, employment for veterans is still good, but all things being equal, this is not a great time to be launching yourself into this kind of chaotic economy.
Yeah, so what should you not do? We talk a lot about tips and tricks, but what should people not be doing?
Well, one of the things that when we did our Best Careers After Service project last year, which was terrific, and one of the things that I discovered in my research and talking to people who employ a lot of veterans and to people who counsel veterans is veterans need to not make going back to their hometown their first choice. Maybe there's a job for them in their hometown, but everyone who I spoke to said, broaden your horizons. Look at other cities, other places, other regions of the country. Now, I've worked at several places throughout my career, and I know it's hard to start over. But especially these days where employment opportunities aren't that great, you've got to really look at cities, regions, companies, which may be in another state, may be on the other side of the country, where you can get a great job, restart a career, start a new career. Do not hold yourself to your hometown or even to your home state. The other thing that we're seeing, which is true every time we have a recession, is that people with lower educational attainment, high school degrees and less especially, their unemployment rate is so much higher than people with college degrees or people with good training in the trades or vocational training. So use that GI Bill. Now is a good time, if you want to get out of the service, is put yourself in a program where there's going to be a demand, whether it's college degrees, which a a surprising number of veterans are getting college degrees now, although it's down a little bit from previous years. But if you can get into college or a trade program, use that GI Bill. That's the thing, especially in a dicey economy like this one, where it may take several years for us to get back to, a vigorous economy again. Get that education. Now's a great time to do it.
I that's very interesting about, looking at job markets and, taking a closer look at that because things are shifting. And like you said, you thought it was just anecdotes you were hearing about people moving out of cities, but there are shifts, and it is, does seem to be state by state depending on where, this pandemic is hitting hardest and what restrictions there are. So I think that's a really great tip. When I was getting out of college and trying to think about what I wanted to do and where I wanted to move to, and for me, I heard people say, be picky, don't take like the first job that you get, or I don't know. I mean, I don't know if people can be very choosy these days. I guess it just depends on, again, your list and what you're prioritizing. But
right.
These are all really great tips,
well,
Bob.
That's a really good point, though, because when I got out of college, back in the dark ages, the economy was in bad shape, and we were told just take whatever job you can get. And I was a journalist. I'd just gotten out of journalism school, and there weren't many great opportunities. And I sucked it up, and I took a job, and I, put in my 2 years, and the economy had gotten better, and then I could move up from there. It wasn't a great start, but it was the only start I could get. So there's something to be said for just getting started. That's why I like the idea of waiting and getting more education, because you'll be able to launch yourself into a better job with more money at a higher level than probably if you enter the job market right now.
But Bob, when you and I were talking earlier, because I want to make this important distinction, because when we're talking about education and, training, you're not necessarily talking about the 4-year typical American college experience, right? So can you get into the kind of the differences there and
yeah.
Mm-hmm.
Yeah, sure. Yeah, sure. I think especially with the whole idea of 4-year college, in some respects coming into question right now because of COVID, but also because of the high cost, there's a lot more thought being given to, getting a 2-year degree, getting an associate's degree, or getting training in a technical field or even a non-technical field, such as, IT or something like that. A good friend of mine was a guidance counselor for a number of years at a high school here in Vienna, and he's retired now, but he is keeping me apprised of what he would be advising students to do today. And in a lot of cases, it's don't go and get that 4-year degree, or go to a community college for a couple years and then go on and get your 4-year degree. So it's not an either or proposition. There are a lot of gradations between a 4-year degree and no education. No education is a non-starter. You're never going to do well with no education. But there are a lot of intermediate steps that people should really think about. Again, a 2-year degree, great. Technical training, great. Sometimes your 2-year degree will lead to a 4-year degree. I know there's some great nursing programs in which you start as kind of a base, nurse, like a nursing assistant, and then you work yourself up and finally get your master's degree in nursing. All along the way, you get paid. So there's a lot of paths to success which are not a 4-year degree.
Yeah, that's true. And I think it's probably time to break that mold, and start thinking about some other things and become more well-rounded economy so that these types of things don't completely take us down a wrong path.
Yeah, well, when I got out, and probably when you got out, that was your choice. And now I got my 3 daughters through college, and one of them through a master's degree. And, it was a struggle. It was a financial struggle. And now I would probably think that it would have been better to start out in community college or focus on only, in our case, Virginia schools. They all went out of state, which was a killer, to the budget. Now I'd probably say, honey, again, 3 girls, yeah, you could go to the University of South Carolina, but University of Virginia is pretty nice
Right.
too.
Well, I think we all
You've
got
got to
caught
really
up
think
in, yeah, I mean, you always want to do, the best for your kids. So no regrets there. But,
right.
I have 3 other siblings and we all, went to schools in California. 3 of us went to UC schools, University of California. So it was a little bit better. Not
Yep.
super, not great, but as far as money, but better. And then, the best piece of advice that I ever got was from my uncle, who's a very successful businessman. And he just said, whatever job you're doing, do the best that you can. And I think that that's really served me because thinking back, since I've been in the workforce, I've gone from communications and PR over to, lending. And then, I've been all over the place, but I really like it and I enjoy it. And I feel like the experience that you get is almost just as good, if not better, than some of, the education or classes that you can be taking. So it really just depends on whether you need specific training. Like if you're a doctor or a surgeon, that's not going to be my next move. But there are things where experience is definitely more important than going to school. So like you said, you got to, stay calm, make a list, prioritize, and then start doing some research. And, in the meantime, just do the best that you can with what you've been given. And I feel like that's all that we can really do.
Yeah, and I think that's great advice. I mean, do the best wherever you are. And another good friend of mine says, whenever you take a job, from the first day on that job, be thinking about what your next move. And it may be internally, it may be externally. And I've been blessed to land at some really great places, and I've been able to stay a long time. But I've also, been a newspaper journalist. I've moved to magazines. I worked for a big financial company. I worked in publishing for a while. And now, through tremendous luck, I'm a Navy Federal and I'm an economist. And it's always been that great advice, which is do the best you can, but always be looking to what really interests you and follow your interest, pursue your interest. And that will pay off for you. Don't think that once you choose a career, that's the end of it.
Right. Well, and getting that experience, like say you just take a job that you're not exactly super interested in, you might get exposed to something that sparks your interest, and then you kind of follow that path. So I think that, even though we've been talking about the economy and the pandemic, which isn't necessarily the happiest topic, I think there are a lot of really positive things and tips that we've talked about here. You think that if we have a stimulus early next year, that's going to be great. We're still kind of riding the high of the previous stimulus. So people just need to, keep their spirits high. And like you said, make a list, prioritize. And, the housing market is the one area also that seems to be going well. So it's not like everything has tanked.
Right.
And I'm interested to see what happens with travel. It's going to be good. And, people can take this time to think about their current businesses and make some cuts in some places and think about growth in other areas. And I think it's a really interesting time. And, Bob, I hope that we can chat again, maybe in a few weeks or months, or maybe I'll actually see you in person. Miss you.
Wouldn't that be nice?
Wouldn't that be great? That's the dream.
I know. Yeah. Well, yeah. I mean, I think certainly in 3 or 4 months, we'll be doing that. And I think it's in 4 months from now, I think the economy will have taken a turn for the better. The degree, the extent to which it's better is an open question, but people have a hard time imagining a year from now how things are going to be because we've been hit with one blow after another. A year from now, things are going to be much better than they are today. And people need to start thinking about that and envisioning a better future, because if you only focus on the negatives today, you're going to be missing a lot of opportunities.
Right. Look for the bright lights. So Bob, 4 months from now, having you back on the podcast, and we're going to see if your prediction is correct. So I'm penciling you in now. No, but where can listeners find your ongoing insights?
Well, I tweet
Besides Twitter.
a lot these days, Robert Frick, NFCU, and I really like people to follow me, especially members. I talk about the economy, but I will also talk about my dog and recipes. I'm also kind of snarky at times because I think you need to poke fun at some of the things that make no sense, especially in the media and the economy. I did that today, and I got a lot of good reactions from it. I think you need to really keep things in perspective, and that's what I try to do. So please follow me there. I will do write occasionally for our website, but Twitter is really my main outlet, and I have a lot of members who follow me. We have great conversations. So,
That's
if you follow me and you're a member, I will promise to follow you back, and I will respond to every comment you make.
Bob, what if this podcast blows up and millions of people start following you? What are we going to do?
I would love it. I can hire people. I can hire people to manage my Twitter feed.
Well, you said you like to poke fun at people that don't make sense, and on this podcast, all we do is make sense because it's making sense.
Well, I won't make fun of you, Emily. But,
time for me to go home. Bob, it was so good to talk to you. I miss these conversations. Maybe I'll start following you on Twitter.
Oh boy, what a treat that would be. But yeah. I mean, certainly a year from now, we'll all be getting together, and I think we'll be wiser for it. I really do.
Yes, absolutely. Well, thank you for ending on a positive note, and to all of you Navy Federal members or listeners out there, please feel free to send us any questions that you might have for Bob or anything that you would like to talk about on the podcast. And, follow us wherever you get your podcasts. Bob, have a great rest of your day.
You too, Emily. Thank you so much.
Bye.
Navy Federal Credit Union is federally insured by the National Credit Union Administration. This podcast is intended to provide general information and shouldn't be considered legal, tax, or financial advice. It's always a good idea to consult a tax or financial professional for specific information on how certain laws may apply to your individual financial situation. References to and participation with the military community does not constitute organizational endorsement. Navy Federal is an equal housing lender. Navy Federal Credit Union. Our members are the mission.